Hello everyone, welcome to Tradingview's channel. So in this video, I'm going to discuss one of my favorite strategies. The strategy is how to find low risk setups at confluence of supports. Now confluence of supports is a very simple concept, but it's hardly spoken about in the Twitter world. And this confluence can actually help you spot high probability trades, which can sometimes you can have really accuracy, winning accuracy of more than 70%. Okay, so that's what we're going to discuss, and I'm going to teach you how to enter, what scanner to use, how to pyramid, how to define your stop loss, and how to exit. Okay, so that's what we're going to look at. So before that, if you do like my videos, if you have watched my videos in the past, don't forget to subscribe to my channel and don't forget to like this video. Okay, so let's get started. So first thing is you need a scanner, right? So I've done a couple of videos already on scanners, but if you haven't watched them, do watch them. But in this video, you can actually look at this CCI based reversal scanner. Now in this reversal scanner, if you see, we have a lot of stocks which will come depending on whether you're using daily time frame or weekly time frame. Or you can use both the scanners for finding these such stocks, and the dashboard link should be available in the description for you to access. Okay, so focus on weekly CCI crossing above -100 and CCI daily crossing above -100. These are two scanners for reversal setups. Now second thing is you need to copy these stocks and move them into Tradingview. So for that specifically, I've done a separate video on that, and you can literally copy hundreds of stocks in just 30 seconds. Okay, so don't forget to watch that video, and that video is going to be extremely helpful, especially if you're a beginner and if you don't know how to copy stocks from charting to Tradingview. Okay, now once you have the stocks in Tradingview, then you need to start finding which stocks you want to select. Right now, what you have to do is you have to keep clicking on the stocks, and you need to find, depending on which time frame you're in, you need to find stocks near confluence supports. There are two rules to find whether a stock is near confluence support or not. The first rule is the stock should be reversing from a major horizontal support zone. Now remember the word horizontal support zone. Now horizontal support zone basically means the stock should have reversed multiple times around a particular area. Right? For example, if you see here, this was the first time, the second time, and the third time here, and again the fourth time here. And that's when I'm taking a trade, because I know this area is already a very strong reversal zone, and probably can take a trade over here or over here. Now this should be clearly visible. Now if you're going to take a trade here, I not really recommend that, because you still do not know whether this is a major support zone. Yes, there is support here, but that could turn out to be a very minor support zone as well. But after the second time reversal, when the third time reversal happens here or here, that is when you know this is definitely an area which the stock is really taking support at. Right, and then you try to buy the stock, somewhere around that zone over here, or you try to buy the stock here. We'll look into how to buy shortly, but that's the first rule: reversal from a major horizontal support zone. Now, the second rule is the stock should be reversing from a major trendline support. Now, in this case, Gokuldas Exports is reversing from a major primary trendline support over here. Already, we had a very strong green candle here on the support, and now again we are having a green candle here, and that confirms that the stock is reversing from a major trendline support. Now remember, this is the horizontal support and this is a major trendline support. So when you have both the reversals happening from the horizontal and from the trendline support, now that's what you call a confluence. Now confluence is nothing but merging of two different zones here in technical analysis. And then the trendline, ensure the trendline connects the wicks, because sometimes some people might draw trend lines, some random trend lines, and stock might still keep going sideways. So you need to ensure the stock draw trend lines connecting wicks as well. Like see how I connect the wicks over here. That's why you need to draw trend lines here. And then the price must be in uptrend in weekly charts. So for example, here the stock is in a clear uptrend on weekly charts, and we're still going up. Right, so the stock must be in weekly charts, and the candles should have low wicks, or you should have big green candles. So in this case, you see you have a big green candle here, or the stock should have low wicks like this here, or low wicks, something like this. Right, you should have low wicks like this around the confluence of support zone. Now, whenever you have these kind of candles here, or you have green candles like this, that definitely increases your probability of winning, and you need to consider only those kind of stocks. If you don't have such, if the stock doesn't meet all these criteria, just ignore them and move on to the next stocks. We have thousands of stocks trading in markets. You do not have to take trades on each and every stock. Okay, let's keep that in mind. Now, once these two rules satisfy, you know that the stock is in your watch list. Now you need to find levels to enter and how to define your stop loss. Right, now entry level. Now entry level should be, for example, in this case, you need to buy. So once you find a stock, here is when the stock is crossing above -100. So cross was at -100 here. Remember, -100 means bearishness, and when it's crossing above -100, coming back into the green zone, which means it is entering, or the bearish trend is almost over, and now it is entering into a bullish territory again, right? Or probably entering the bullish territory. We don't know that yet. But then you see also there's a minus increase in volumes. We see some strong green candles. So you need to mark that point, and then you enter above that day high. So the stock comes in a scanner on this day, and you enter above that day high. So which means next day the candle crossed. So you enter above this, or you enter above the recent 2 or 3 day high. You can also enter above this point if you're risk averse, or you can also enter above swing high depending on what you want. But I usually enter above the previous day high, so that I take a pre-entry with the smallest stop loss available. Okay, so that's how you enter the stock. Now the next point is how do you define a stop loss, right? Now stop loss should be around the previous swing low, either here, or if you're very conservative, you can also keep it here. Now the reason I kept the stop loss here is because I consider this as a reversal, and that's why I consider stop loss here. Or if you're conservative, you can also keep your stop loss over here, because here also see there are lower wicks, which means the stock has found demand and the stock is reversing, right? You can also keep it there if you're conservative. And then you enter above this candle, as I said before, right? Now, the stop loss should not be more than 10%. Now, for example, if you're keeping a stop loss here and the stop loss is more than 10%, it doesn't really make sense, because for a swing trading perspective, the maximum you're going to get is 20%, probably maximum 30%. So you need to ensure that your stop loss is very minimal. So if it's greater than 10% stop loss, ignore the stock and move on. As I said, there are thousands of stocks you can look at. So yeah, ignore and move on. So that's how I would trade this particular. I keep defining stop loss for this one. Now the next one is how to pyramid, right? Now, for example, here. So once you identify and enter here, then you need to find the pivot point over here, and then you enter the stock when it crosses the pivot point again. Or you might see some structure like this, and you enter above the previous swing high here. Right? The price should consolidate for at least 3 to 5 days. Now remember, 3 days here after this entry over here, the price has consolidated for 3 to 5 days here, or even 3 days is fine, and then you enter above that point over there. Right? Or you add above the previous swing high, as I said. And if you're conservative, add in the last 30 minutes of the day or in the next day as well. So I usually take the entry above that point over there, because 3 days consolidation already over, but sometimes people might want to wait and see if the candle is really closing good, if the volumes are there. So you also can enter the last 15 minutes of the day or the last 30 minutes of the day, or enter the next day, however you want to do it. Right? Now that's how you add more to the stock. Next is how you define targets. Now for targets, I always have a simple rule. Look at the previous swing highs, right? Now this was the point, the previous swing high we entered here, and this is the previous swing high. So that should be your first target if you're a swing trader. And then look at the previous swing high. You can also take this as a point here, but that's you can also consider that as a target 2, or you can also consider that previous high as a target 3, right? Or target 2, however you want. So since this is very close, I don't want to consider this as target 2. So that's why I consider this as target 2, right? So you can also use the pivot. You see these numbers here. I got this using the pivots HL indicator in Tradingview. You can also use that and see how you want to use it. So it's a simple, straightforward thing. You keep this, whichever is the previous number, you could keep that as a target, or you can also keep this as a target here, or keep this as a target here. You can do that on any time frame. It's a very simple indicator, and you can do that. Now, as an alternative, if you don't want to really, wait for that to price to come here around the zone or around the zone, you can also try to book 50% of your positions at 3 times the risk. For example, let's say if your stop loss is 10%, then try to book 50% at 30% return. And then you can trail the remaining stop loss using any indicator that you want. You can use super trend, you can use moving averages, whatever you want. Okay. And then, you book your stocks whenever the target reaches, and you try to trail your stop loss for the remaining position. So that's a very simple Confluence support strategy that I use, reversal from Confluence supports. Remember, Confluence support has 2 rules: horizontal and trend line support. Only if it matches, you have to take the trade. Otherwise, skip the trade and move on. And then how to define what you want to enter, what price should your stop loss be, and try to pyramid and make the most of the strategy. Okay, so if you did love the strategy, don't forget to subscribe to my channel, and don't forget to like this video. And also do a favor for me and share this video with your friends, because a lot of people are struggling to find strategies. Remember, there are hundreds of thousands of strategies, but you just need to stick to one strategy which you understand, and this could probably be that strategy that you're looking for. Okay, so I'll leave you here. Take care, stay safe, and trade safe until I see you in another video. Bye-bye.